Hey,
Ryan Bolton here, local mortgage expert, ryanbolton.com. I'm here answering questions about mortgage and real estate. If you're looking to purchase or refinance a home in Utah or Nevada, that is where I'm licensed. Love the opportunity to help you. I've been doing home loans since 1999, and I've seen and done it all. Really enjoy what I do for a living and really love answering questions about real estate. So let's just dive right in. So I'm on Quora. They've got great questions posted here, and I like to answer them for people and then just film some of the answers as well. The question I found here that I think is pretty interesting is the home next door to me is abandoned. How can I legally buy it? There will be an ownership of that particular home. Either county records will show who the owner is, just a matter of tracking down somebody that represents the estate, or if the actual state owns it or a government owns it, something like that. But there will be a process to just get a hold of who the current owner is, whether it's still an individual, a company that's been assigned the property, maybe a bank is foreclosed on it. So there is going to be still somebody that owns it that you can talk to. It's just a matter of tracking that person down. So you can check with a local title company. They may be able to check on who the owner is, and maybe they'll be able to find records there. But it's just a matter of tracking down the current owner. The next one I have here, if a home is under contract, can the bank foreclose on it? Yes, absolutely. So just because it's under contract or you're in the middle of a loan modification doesn't stop the bank from foreclosing on the property. Now because they have certain guidelines they have to follow when it comes to foreclosure, they're going to want to start the clock on some of that stuff just so the waiting periods are over. So even if you're negotiating with the modification department or you've got it under contract, that doesn't stop the bank from starting to foreclose on it, or at least get some of those waiting periods out of the way, like the notice of defaults, things of that nature. So just because it's under contract doesn't mean they won't still take it to the courtyard steps and still try to foreclose on it. So you just want to make sure that contract does close before some of those other dates kick in. But the shortest answer I can answer for you is yeah, just because the home is under contract would not stop it from going through a foreclosure process. Let's see. Is 80 degrees too hot inside the home? No, but you might make your fridge work a little harder if it's that hot. I don't think there's anything inside the home that would get damaged at that degree. I mean, that's going to be pretty warm for some of the electrical things. I think the fridge would probably be the thing that would take the biggest brunt from that. So I think short answer, no. I don't think 80 is too hot for inside the house. So I think that's an interesting question there. All right, let's keep going. Can the HOA kick you out of your house when you own it? Now, an HOA can put a lien against the property if you stop making the payments or if you violate enough of the rules and haven't paid the fines, things of that nature. But they can't just one day knock on your door and say, you've got to get out of the home. They'd have to go through a process of basically like foreclosure. Because essentially, what they can do is if you haven't made your payment, or haven't paid the fines or keep violating the rules, they do have some laws that they can go in and actually start taking the home away from you. That'd be really extreme, but it is something that could happen. There's obviously attorneys you can get involved if it ever gets to that particular point, but there's got to be a lot of things that happen first before all of a sudden they knock on your door and say, get out of the house. I mean, it'd be well down the road before they can do that. Now, can they start the process to do that? Sure. There is laws that are written into the rules of the HOA and things of that nature. But that'd be pretty extreme. I don't know if I've seen it get to that far where somebody literally loses their house because of the HOA they're in, but there is ways they could do that if they needed to. Let's see. How long does it take to finish house after drywall? So I guess it's probably a construction question. It really depends on how much is left. It depends on the subcontractor, supply chains. There's no just straight answer that it's exactly 2 weeks or 3 months or something like that. But usually drywall stage, you've got a lot of the heavy lifting done, and now a lot of the stuff can get done quicker. A lot more can be worked on at the same time now that the drywall is up, where a lot of times you can't even do anything until that stage is done. So usually you'll really see a really accelerate at that particular point because now they can get more guys in there to finish up the last of the work. So I think usually it's pretty quick after that stage. Usually getting to that stage is shorter than the stage from drywall to finish is usually what I've seen. Let's see. What is the income required to buy a house at 800,000? So there isn't just a general number because 800,000 is the purchase price. So it depends on your loan amount. It depends on how much money you're putting down. It depends on your other debts. So it depends on if you're got a $500 car payment or multiple car payments, student loans, that sort of thing. A general guideline is your mortgage payment along with all of your other debts. So visas, student loans, car loans, whatever other loans you have, other real estate, all of that needs to be under 45% of your gross monthly income. There's exceptions, there's rules, there's guidelines to all of that, but that's a general starting point. So if you take your monthly income on your pay stub and times it by 45%, minus off all your other debts, whatever's left over is what your mortgage payment can be. But you also have to factor in the homeowner's insurance, taxes, mortgage insurance, all of those things. So it is something where talk with a local lender. I'd love to be that lender for you if you're in Utah and Nevada, and run a pre-approval and find out how much income or how much you can qualify for. You can run the numbers both ways. So there isn't just you have to make $1 million or 500,000 a year or $400,000 a year. There isn't any of those just general numbers for every particular home. There's a lot of factors that go into a debt to income ratio, but generally speaking, you want to be under 45%. Let's see what else we got here. If I buy a house with 100,000 cash, do I have to explain where the cash comes from? Yes, if you're doing a loan. So if you're doing a mortgage loan and you're putting $100,000 down, we do have to source, season, verify where those funds are. If the $100,000 is just the total price of the home, I would think that's pretty rare depending on where you're living at. There's areas obviously where you can still buy a home for 100,000, but I think the median home price across the country is well in the $280,000, $300,000 range and going up. So I'm assuming that the 100,000 will be the down payment. The short answer is yes. Anytime that you're bringing money into a transaction, the lender is going to want to see where it's been for the last 60 days. So if it's gift funds, selling another car, selling another house, but if it's just been cash you've been accumulating and just kind of stuffing under the mattress, we won't be able to use it. So the best thing to do is try to get that money into a verified account and let it season for at least 60 days. So, and a lot of people say, well, why don't you use the cash? There's a lot of laws that govern what cash we can use in a transaction. There's money laundering activity laws, there's suspicious activities, there's illegal source of funds. A lot of that ties into the mortgage industry, and there's a lot of guidelines of how we can use the cash. As long as it can be sourced and seasoned and verified where it came from, we can use it, but it's best to get it into the account, let it season for at least 60 days. Let's see, how do you hide a camera phone in your bathroom? We're going to skip that one. Let's see. Let's jump into a couple of the categories here real quick. They have a bunch of, I'm on Quora, just finding some questions to answer for people. But if you have one, please put in the comments, like and subscribe. Love to have you be a part of this. Really want you guys to drive where you want these questions going, and just make sure that we're answering your questions as best we can. Here's a question just posted 8 minutes ago. How long after foreclosure does an FHA loan have to be paid off? So when there's different levels and stages of foreclosure, but once FHA or HUD or the lender owns the home, that loan has been released or from the person. Now, that doesn't mean they can't go after you for the judgment, for the difference, for the balance. There is usually insurance with FHA that does kick in to protect the loan, but it is essentially paid off in the sense that debt is now paid off. But anything short, they can go after you for a judgment, but usually the mortgage insurance kicks in to cover any of the differences. So it's within seconds after, basically when it's foreclosed, the lender then owns that property, and then that's when that loan is paid off. Now, when it reports on your credit can be a different situation, but it is right after that foreclosure. Let's see, we've got a couple new ones here. Let's see. How do you convert a primary residence into a rental in order to qualify for a mortgage on a second house? So there's a lot of nuance with that particular question, but you can convert your primary residence into a rental at any time. And it's something where I've seen people do that, where they're basically going to convert their current home into a rental and go buy another home as a new primary residence. So there's 3 levels of home ownership. You have primary residence, which is the home you and your family live in on a day-to-day basis. You have second home, which is more for vacation rentals where you're not renting, or not vacation rentals, excuse me, where you're vacationing to it, where you're using it sometimes of the year, sometimes not. But anytime you generate rental income, then it becomes an investment property. So there's a fine line between second home and investment property that usually gets blurred, unfortunately. But anytime that you're going to derive rental income from the property, it is a rental home, not a second home. But the terminology is I want to go buy a second house. Is that used as a second home, like a vacation home that you're going to use 6 months of the year, 3 or 4 months out of the year, and then it's just going to be vacant the rest of the year, or just your next home or your second house? So I think that's really what the question is there's some terminology that can get confusing on how this works. And that's partly why I'm doing these videos and doing these podcasts, to kind of clear through some of the abbreviations and things like that. So um, you can convert your current home into a rental property and then go buy another primary residence. So that's totally normal. It's not really anything you have to do with your loan, like your current loan on the property. It just stays where it's at. Nothing changes. You don't have to refinance to then convert it to a rental property. Many people, this is a way you can build some wealth and build a real estate portfolio, is live in the home for 6 months, 2 years, whatever it is, then go buy another house and turn this one into a rental property. The biggest trick is qualifying. If you don't have a history of being a landlord, many lenders are going to want to hit you for the payment of both properties. If they will let you use the rental income of the first property, they will typically use 75%. So they won't use 100% of the rent. They're going to take a little bit of an expense ratio off of that to make sure that you can handle downtime when the property isn't rented, or repairs or modifications or things like that. But it's easy to do. It's just something where you have to go through the qualification. And a lot of it comes down to debt ratio and down payment. Now you're going to have a down payment on the other home. I've seen people do a refinance on the primary residence to pull some cash out to buy another property. It's just all about timing. So talk with your lender, tell them what you're trying to do, and make sure that you have all your ducks in a row. Get a line of credit if you need it, or just save enough down payment to buy the next rental property. Let's see. If your home is denied after closing on a home purchase, what happens? If it's already closed, it wouldn't be denied. So some of the terminology might be wrong here. If your loan is denied after closing on a home purchase, what happens? Well, I haven't seen that happen before, because if you closed, you're done and it's not denied. Usually you're denied well before you're going to closing. So maybe the terminology is wrong there. So, but yeah, you wouldn't be closing if you're denied for the loan. If you're clear to close and you're ready to go, now maybe something post-closing could happen where something is detected and there's an issue. But if it's a post-closing issue, it's more of an issue where the lender gets stuck with the loan and can't sell it, or has to sell it on the secondary market to different servicers that handle loans that don't follow a guideline or something like that. So, but yeah, it's something where if it's denied after you're in the house, the loan's done, it really falls more on the lender that didn't do the denying before the closing. So that's an interesting one. That'll be interesting to follow up on what happened there. Let's see how long we got. We're about 13 minutes here. What do you have to be careful about when someone just offers to buy your home? I mean, look at the contract. You want to make sure that the contract is legitimate. Read all the fine print. I would be careful too if the contract says they're going to assign the contract or has the option to assign it. I see people that run around on these home buying investment seminar type things where they just run around, make all these offers, then make the contract assignable. When they assign it, they raise the price and keep the difference. Many states that's actually illegal, because you're essentially selling something you don't own. You're doing something a real estate agent would do, but not licensed. So be careful in the contract. So just read the contract. Have a real estate agent look at the contract for you, a friend, have a title company, have a mortgage lender. Just review the contract to make sure that everything's on the up and up, and that there's not something fishy that's going on there. One of the other things I would say is be aware of the dates on the contract, that make sure you have time to move out, or what you're trying to do there. But get it all in writing. If there's nothing in writing, they just offer to buy your house, get something in writing just so there's protections there, and maybe consult a real estate agent. How do you sell a house in a few days? Price it right. I think pricing is a big key. Obviously, if it's cheap enough, it's going to sell really fast. Now, if you're trying to get the most value out of it or try to get the most money for it, there's other things you can do with staging and getting it listed correctly, cleaning it up, maybe do some repairs, things of that nature. But if you're just looking for a fast sell, price is going to dictate it more than anything, whether it's a house, a car, whatever it is. If it's cheap enough, it'll sell. It'll sell in hours if it's cheap enough. There's enough buyers out there right now, and there's a still a low amount of inventory. If it's priced right, it's going to sell fast. Let's go one more here. Real estate. Here's a real estate investing one. Let's see. What are the advantages of using a real estate agent when buying or selling property? When you have a real estate agent, they're contracted to be in your best interest. So when you're buying and selling, there is kind of two opposing ideas here. When you're buying, you want the cheapest price. When you're selling, you want the higher price. So having a representative that's representing both of those interests to the best of their abilities, that is one of the big advantages of using a real estate agent when you're buying or selling a property. The other thing you can do is it can help buffer all the buyers that are coming in if you're a seller, so you don't have to worry about getting all these comments on Facebook or having to schedule all these things or talking to buyers that really aren't qualified. There kind of is that buffer between you and the buyers to make sure they're kind of pre-screening it and starting the negotiation process for you. Also, they're going to deal with the contracts, all the legal stuff of moving ownership and doing all that stuff and being able to negotiate the price, the dates, the contingencies, all of that stuff is really what helps on a seller. With the buying, it's the same thing. A buyer's agent's going to look at the home. They're going to see things might be wrong or right. They're going to help you narrow down your search. They're going to help you with the negotiation process, maybe letting you know about the area, the surrounding area, as far as what schools are close by or shopping centers, and maybe the rules of the HOA or the CC&Rs within the neighborhood. Maybe there's certain areas within the city that has certain rules on whether you can rent the home. All these things these people do on a daily basis. Real estate agents are in the market, know what's going on, know what subdivisions are coming about, know what that's their job. I would say I would definitely use a real estate agent. I've been doing mortgages for since 1999, and agents are worth their weight in gold if you use the right agent. Unfortunately, there's a lot of agents that don't do a lot of transactions, that are very, very part-time. Maybe they only have their license to do one or two or three transactions for the entire year. Really screen the agent you're working with. And just because they're a family member, it's still worth checking around and using a professional real estate agent. Like I said, whether it's mortgages or real estate agents, there's a lot of part-timers. There's a lot of people that aren't day to day in and out like I am. I'm here every day in my office. I'm always working on perfecting my craft and learning what's out there, reading guidelines and reading the market. And this is my career. I've been doing it for a while. It's not a part-time thing for me anymore, and never really was. I'm vested in a sense. I've been doing this for a long time. Don't know what else I would do. Really enjoy what I do for a living. And you'll find agents that are the same way. If you need a referral for a real estate agent, call me. I work with them on a lot of agents, and I see the ones that are worth the money, maybe some that aren't. I mean, I don't want to badmouth anybody. Everybody's doing what they can, but there's really good agents out there. There really is. Picking the right one will save you a lot of headache. So I hope you find this information helpful. If you have any questions, comments, concerns, please post them in the comments section. Love to have you subscribe, of course, and we'll answer your questions on upcoming videos. So hope you're having a wonderful day, and I hope you found this information helpful.